Hi, everybody. My name is Chris Maxey, and I'm with Prefix Accounting. Today, we're going to be talking about applying for a Restaurant Revitalization Fund grant. And this information has been updated as of about 15 minutes ago because the information on this changes pretty fast and furious, and we don't have guidance yet from the SBA. Just so you know, you can go ahead and ask any questions that you do have in the chat window, and we'll try to answer them during this webinar if we can. With that being said, there's a lot still up in the air that we don't have answers for, but we will have a log of all the questions that you do have, and as we find out answers to these questions, we will be distributing the answers to folks that are asking them. As well, this webinar will be recorded and the PowerPoints are going to be distributed after the call. So you will be able to go back and watch this webinar afterwards, and you will also have access to the PowerPoints, which will also have links and important information that you might want to check, look into a little bit further. As an intro, my name is Chris Maxey. I'm in charge of operations and advisory at Prefix Accounting, and our firm is focused on bookkeeping and advisory services for restaurants specifically, as well as some real estate clients as well. We really try to focus on the advisory and financial analysis portion of our business, and we think that that's really what makes the difference between us and the competition. I just wanted to take a moment to say thank you to a couple of organizations that have really done some amazing work to try to get us to where we are today. Two of them come to mind in particular. The first one is the Independent Restaurant Coalition, which if you are a fan of Top Chef and have seen Tom Colicchio, you know that he has been on TV for the last year trying to get the restaurant acts passed and get support for restaurants specifically. They've done a lot of work, and they've built up a grassroots movement to try to get this funding in place. So it's really, a lot of that is thanks to them and their efforts. So if you have a chance and you have the ability to go out and support this organization, I highly encourage it. The other organization is Mass Restaurants United. If you are in Massachusetts, you've probably seen these folks pretty consistently trying to lobby on independent restaurants' behalf. They've done really wonderful work, and the events that they've been holding in order to provide a community for restaurateurs has really been amazing. So if you have the opportunity to continue to support these organizations, I highly encourage it. The one silver lining that's come from the whole COVID epidemic is the fact that these organizations now exist, and we now recognize their importance and how much we need to have them and continue to support them as they support us. So let's get into it. The Restaurant Revitalization Fund. It was passed with the American Relief Act a couple of weeks ago as a portion of that act. A couple of disclaimers with this. We're still waiting on a lot of information from the SBA. While the bill was passed, and there's quite a bit of detail in the bill, there are disclosures all throughout the bill saying that it's all subject to SBA guidance. Now, if you are unfamiliar with the SBA is the Small Business Administration. It's a branch of the US Treasury. They're in charge of a couple of different programs. One of them being the PPP, Payroll Protection Program, the EIDL loans, and other loans that you may have gotten outside of this epidemic. So with this program specifically, it is a grant, it's not a loan. And if you've gone through the process of the PPP or the EIDL, you'll notice that there is a big difference there. You don't have to apply for forgiveness like you did with the PPP, and you don't have to pay back a loan like you did with the EIDL. So the money that you receive, as long as you use all of it and use it all appropriately, you're good to go. There's no certification process like there is with the PPP. Another key difference is that the SBA is managing these grants themselves. If you did the PPP, you had to go through your bank. In this case, you're going to go directly through the SBA in order to get this money. This has some pros and cons. The pros being is that you know exactly what you need to do with this, and you're not really relying on how prepared your bank is for this, this grant. The downside is that it's going to take them a little bit longer than it would have with the PPP, which moved pretty fast but made a lot of mistakes. You have to be able to demonstrate a loss of revenue. If you hit your prior year numbers or did a little bit better, you're right off the bat, you're not going to be eligible for this program. They're trying to replace revenue with this program. You have to have under 20 locations. You can't be publicly traded, and you can get up to $5 million per location or up to $10 million per group. The final thing with this, and for me, the largest aspect of this that is different is that 2020 businesses qualify. Now, if we roll back time here and look at what we were thinking about as an industry in the beginning of 2020, we were all thinking about how this was going to be a gangbusters year. A lot of people were looking to expand, add concepts to their group, or maybe open a new location, get started with a business. It was shaping up to be a great year. Unfortunately, that didn't pan out, and it was a very different year than we were expecting at the beginning of 2020. So a lot of businesses were in the process of opening up new concepts, but what do you do at that point? It's not like you can get out of your lease obligations, or you can step back and back out of it. Some people could, but for the most part, once you're halfway through opening a restaurant, you're opening a restaurant, whether you like it or not. And so a lot of these 2020 businesses were disqualified from this process, and were disqualified from any sort of aid on the state level as well, because many of them used the SBA guidance, which said that 2020 businesses weren't eligible. So this is going to be huge for those newer businesses that were kind of left out to dry for the last year. Couple of more details with this program. Preference is going to be given to owners controlled by women, veterans, and other socially and economically disadvantaged groups for the first 21 days. They don't have a definition of what other socially and economically disadvantaged groups are quite yet. We'll find out what that is with the release of additional guidance. The other thing is if you don't fall into these groups right here, you don't have to wait 21 days before you can apply. You can apply as soon as they open up the application, but we don't necessarily know when that date is going to be, and they're going to take preference to those groups first before processing your loans, but you will be put in line. So make sure that you apply as soon as you are able to, and get your place in line so that they can process through all of everything in order. They also have set aside $5 billion for businesses that have under 500,000 in gross receipts. So if your business did under $500,000 in sales, there is more money specifically set aside for you. So hopefully that will not be depleted as quickly as the rest of the money. You also must certify that you have been negatively impacted by COVID. If you were dealing with, if you pivoted quickly, and I hate that word, but if you pivoted quickly and you already had a very strong takeout business and your business actually improved because of that, you have to certify that you were negatively impacted by COVID. So again, if you are breaking even compared to the time previous to COVID, this program really isn't for you. So eligible businesses. The businesses that are eligible, it's a kind of a weird list that they put out, but it's essentially restaurants, mobile food stands, food trucks, food carts, caterers, inns and bars, brew pubs, tasting rooms, tap rooms, or any place of business which assembles primarily for the purpose of food or drink. Couple of things that have not yet been defined are businesses that have multiple functions. So for example, if you have a grocer and you also have a cafe, if you are first a grocer, does a business that also has a cafe qualify for this program? That's yet to be determined. We still need to figure out what is going on with that. So we're still waiting another week or two to hear back whether or not those businesses are also going to qualify, or if it's only for primary businesses. So one of the big questions is how do the restaurant revitalization grants, how are they calculated? There's three major ways in which they're calculated. If they were opened in 2018 or earlier, it's basically just your 2020 revenue compared to your 2019 revenue minus any PPP loans that you have received. If you opened in 2019, what they're looking to have happen is for you to have compare your 2019 revenue and 2020 revenue. It's just that you have to make an adjustment so that it can be your annual estimated numbers compared to your 2020. So essentially what you're doing is if you opened halfway through 2019, you divide that total revenue by 6 and then multiply it by 12 so that you get a whole year number that you can compare to 2020. Again, less any PPP loans received. If you took a lot of PPP loans, or if you took both draws of the PPP, you are still eligible. But if it outweighs the amount of revenue that you decreased, you may not be eligible for any money with this at all. There are a couple of circumstances where business may have only gone down 15 or 20%, and the money that you received from the PPP was more than that decrease in sales. So it's important that you calculate those numbers. And this is the part that's really new. This is if you've opened in 2020 or if you're in the process of opening. If you opened in 2020, you are eligible to receive funding equal to the eligible expenses incurred minus revenue. Now, there's a lot of information going on and going about with this. If you look in the bill currently, and a couple of accountants have pointed this out, it currently says that it's only the only eligible expense that you can use for this number is payroll. That's an error. And I was on a webinar, a meeting earlier with the IRC, and there are a couple of the lobbying and tax organizations that they're working with. The SBA has acknowledged the fact that they made that the bill has an error, and it's supposed to be all eligible expenses incurred. So you may see some differing information out there from other accountants or other companies that is saying it's payroll only. Currently, that is correct. It says it's payroll only. However, the SBA already acknowledges the fact that it's wrong and that they had meant for it to be all eligible expenses incurred. So when we see the first drop of PPP guidance, or I'm sorry, restaurant revitalization grant guidance, we're probably going to see that fixed right off the bat. And this really isn't something that's new, especially for these large, monstrous spending bills, it's inevitable that there are a couple of errors. There were a lot of errors with the PPP program, and the SBA went through and fixed a lot of these errors. It's expected that it's probably going to be the same situation, though this aspect of this bill is much simpler than the PPP was, which had a lot of very technical calculations in it. Restaurants that have not yet opened are also eligible and can receive funding equal to eligible expenses incurred before the date of enactment. So the day that the bill went into, was signed, that's the cutoff date. You're eligible for any expenses up until that point, and then from that point, it's done. So what are eligible expenses? If you have applied for a PPP loan, a lot of these items are going to look very much the same. You have payroll up, but excluding any compensation over $100,000, benefits, sick pay, mortgage, and rent and utilities, maintenance, and now we start getting into some of the restaurant-specific areas: outdoor seating construction, protective equipment, cleaning materials, food and potentially beverage, operational expenses, and debt obligations to suppliers, and other covered supplier costs as defined by the PPP. That's important. If the PPP changes how they define expenses, it will also change what this uses for definitions as well. Now, we're not expecting that the SBA is going to change that, but they just wanted to leave themselves an out in case they did discover that they needed to make any sort of change. The one that we have on here that's a little bit of a question is the and beverage. Sometimes the state and federal governments don't like the idea of paying for liquor. It's probably going to be added, but it might not be. It's a little bit of a gray area. We're hoping to get that more clearly defined. So, applying for these grants. There's actually quite a bit that's up in the air about this. Currently, if you've done any research on these grants so far, you've seen reference to the DUNS system and the SAM numbers. There's been a lot of back and forth between the SBA and the Independent Restaurant Coalition on whether or not that's actually going to be required or not. It's waffled back and forth multiple times already. The IRC is pushing very, very, very hard on the SBA to eliminate this, this DUNS and SAM number. And when I was on that call, they were saying, wait till the end of the week. Hopefully we'll have they'll have come to terms with whether or not you're going to need to have those numbers or not. In the event that we are burdened with this application process, there's a lot of stuff to be done beforehand. And I also would like to very much emphasize that you might not have to do any of this, but you don't really want to wait until the last minute to have to deal with this, okay? There's a lot of items on this list. A lot of it's duplicated, but you still have to collect all of this information, and you don't want there to run into an issue with a week before they launch this, this grant program, and risk yourself being put at the end of the line for one of these grants. So the first part of this process is to get a DUNS number, and you may already have a DUNS number. This program's pretty old, and it used to be a more common practice to have a DUNS number. In probably the last 5 to 10 years, it's become less relevant identification system. So if your business is older than, say, 5 years of age, you may want to search to see if you already have a DUNS number. If you already have a DUNS number, you're not out of the woods yet, because you have to make sure that that information is perfect, okay? In order to apply for the DUNS number, it's pretty straightforward, but it didn't match it may not match exactly in a couple of places, and that is going to be what sets off a bunch of triggers to get things fixed. So if you have a DUNS number, make sure that it matches perfectly. And most importantly, the business name needs to match perfectly. Punctuation, commas, incorporated LLC, if that is included in your business name, then you are going to have to, and that is not in the DUNS number currently, it's like your DBA name if you have one, you need to make those corrections, and you need to make those corrections pretty quickly. I have heard that they are making adjustments to those existing accounts relatively quickly, but you don't want to wait. You have to make sure that the entity name that is listed on the DUNS number matches your legal name. And if you don't know exactly what your legal name is, check your tax returns, and it will have it. It should have it exactly as it should be listed on DUNS. The other thing with this that is a glitch that I've already run into a couple of times is the business address. It wants your physical business address, but it also is using USPS to verify the physical business address. And if some of you are in rural environments or even in urban areas, those two things are very different. And so you may have an issue getting the business address verified if the business address is physical and not USPS verified. So expect to run into issues with that if you've ever had issues with getting mail sent via USPS to your address. That is going to be a pain in the ass for a lot of people. You are also going to have all of this other information. I'm not going to go through every single bullet point because I'll put you all to sleep. But I will hover over a couple of things. 2 legal business docs with business name and address clearly indicated. Again, you want this to match your legal name. What they're trying to do is verify the fact that you are actually a business and you are where you say you are, and you're not some made up entity like some shell corporation. They're trying to figure out to make sure that you are who you say you are. So make sure that whatever you're using for the supporting documentation matches what you have put in for all of your DUNS information. And the other thing with that is try to make sure that it is listed. They'll give you, if you hover over, there's a little question mark icon on the DUNS application process that'll list all of the examples. I just have the 3 here that are like very cut and dry, like simple to find and verify pretty clearly what your business and your business address. The other 2 that are on here are social media accounts. They're not required, but if there's an issue and they want to come and verify, that's the easiest way for them to verify that you're where you are. So even though it's not optional, if they're going back and reviewing, you're just making their life easier. So try to provide more documentation, more consistent documentation if you can, to make this process better. I just want to go back, and also I want to point out, if you are asking questions in the chat, try to ask questions in Q&A so that I can list through it, because it's going to be hard for me to grab all these questions in the chat as opposed to Q&A. And there are a lot of questions, so just so you all know, we will try to get to as many of them as possible, and I will also have a Q&A at the end of this, and I'll try to answer those questions as well. As far as applying for SAM, SAM is a government program that essentially registers your business as being eligible to receive money from the government. So in order to get a SAM number, you have to get a DUNS number first. So once you get the DUNS number, then you can apply for SAM. You need a couple more pieces of information. You need to get a cage number assigned to you through this SAM registration process. And you also need a notarized letter. This is painful. There is a step, what I have here in this link is a step-by-step process from the IRC on how to go through this process and all the information you need and what you need to say in the notarized letter, okay? Again, I want to reiterate, the IRC is trying very hard to get rid of this process because, as you can see, it is cumbersome. Finally, with applying, we have to apply for the SBA. We do not have a application form yet, like we do with the EIDL and the SBA. However, we do have past programs and applications to rely upon. So using that historical information, this is basically what we're coming up with what probably is going to be on this application. So try to get this information pulled together, okay? Your 2020, 2019 taxes, those are probably going to be required. They need to compare revenue, and that the easiest way for them to do that is with tax returns. So make sure you have that. They may also need 941s. And if you're a business that is currently in the process of opening, you're going to also need current financials, because as we said, if you're in the process of opening, you may not have opened yet, and you may not have a 2020 tax return, but you do have expenses. You're going to want to have current financials. So make sure you get your bookkeeping up to date. Your legal and DBA name, the year you were established, your NACIS code, which you should be familiar with from Draw 2, business address, TIN, all of those sorts of basic pieces of information, as well as your business officers and shareholders as well. They've been consistent in asking for that question, or for that information. So I took all of that information and all of the fields that are necessary, and I cut it down to a pretty cut and dry list, okay? This is all of the information that you're gonna need, hopefully. And this is everything that you need to get together. This PowerPoint is going to be available to everybody. So when you get this PowerPoint, you can copy and paste this information into a Word doc, pull it all together so that it makes it really easy for you to go through and apply for everything. You'll have all of the information at your fingertips, okay? But you want to come ready to have all of this information done. And again, for the fourth time, you're going to want to not wait on this until the last minute. So now that we've gotten through all of that, we're going to go into some Q&A. And some of these questions I'll have answers to that we have in the chat. And then I'll go into some extra questions that we may not have predicted. First question, and the biggest question that almost everybody asks is, will this money run out? Maybe. There's $28.6 billion in this fund. There's about 660,000 restaurants. There's more because there's also a couple of other business types that were listed, so it's probably a little bit more. But that's about $40,000 per business for every single restaurant in America. It's obviously going to be a lot more for some and less for others. It's possible that this money runs out. And really, and honestly, we want this money to run out, because if this money is left over and there's money left over in this fund, then our elected officials are going to say, well, I guess they didn't really need it. So make sure that after you get your application submitted, that you're also talking to your other friends that are in the business and making sure that they get it submitted as well. Because what we want is for this fund to be replenished. We want to show that restaurants are hurting, and we want to make sure that everybody is getting a piece of the pie. If you have been in the restaurant industry for a while, you know that the margins are very thin. But at the same time, because our margins are thin, we're creating a massive amount of economic impact that ripples throughout the economy. You know, if we only have a profit margin of 5, 6, 7%, you know, the other 93% is going into the pockets of employees. It's going into the pockets of suppliers, contractors, the trash guy, the propane guy, the utilities. The amount of impact that the restaurant industry has is really quite profound. So make sure that you apply for this loan. Make sure that your friends are applying for this loan. We want this money to be depleted. Just make sure that you get there first. Another note is that if anybody listens to the Eater podcast, it's a podcast put on by the publication Eater, but they do a lot of commentary on the restaurant industry, and a lot of times they'll bring in people that are answering questions about the industry itself. So this week they brought on Chuck Schumer, who was one of the leading co-sponsors of this aspect of the bill. And one of the things that he did say was that these funds, if they dry up, they are definitely looking to replenish, okay? So they are expecting that this money will probably run out. The time frame is unknown, how fast it will run out. But Congress is already ready to pull the trigger on it if it's necessary. Should I get PPP Draw 2 or this grant? This is a question of risk, okay? If you want to ensure the fact that you get money, I would say apply for PPP Draw 2 first. There's $120 billion in that fund remaining. It is a well-established program. Banks have been processing these loans pretty quickly at this point. But you also have to apply for forgiveness. And so there's some paperwork required depending on how big the draw 2 loan would be for you. Now, the grant, we don't know a lot of information about it, but we know that it could potentially run out. And so you have to weigh the costs of whether or not you want the grant money and not have to do a lot of paperwork and deal with a lot of bureaucracy other than the application process, or take the PPP money, know you're going to get some money, and then go back and apply for the grant as well. One thing I'll point out with this and reiterate, I said it earlier in the presentation, but you can take both the PPP Draw 1, Draw 2, and this grant. It's just that the amount of money that you receive from this grant is going to be less because you took those two draws. So it may be that you can apply for, you might not even be eligible for the grant because of how much money you received from the PPP. But if you do still apply for the grant, it's just going to be a little bit, it's going to be less than what you would have gotten originally applying for the grant. Do I reduce my employee retention credits or EIDL from this grant? As it's currently written, there is no interaction between the credits, the employee retention credits, and the EIDL. That isn't to say that the SBA isn't going to come in later and say that it does, but as it's currently written, it does not have, those two programs do not have any interaction with this grant. The only program that does is the PPP program and the shuttered venue grant. If you can only choose between this grant and the shuttered venue grant, you can't do both. Okay, that's a really niche case because those shuttered venue grants are more designed for theater, Broadway, those sorts of venues. What if I don't use all of the money? As I said before, in a normal environment, a lot of full service restaurants have maybe a 5% bottom line. It would be kind of surprising that you couldn't use all this money, seeing what the normal calculations are for how much people would receive. But if you don't receive all of that money, technically you would have to give it back. We don't know what that mechanism is. We don't know what you're gonna have to do in terms of verifying that you did spend all of that money. It might just be a matter of answering a certification question. But technically, as the bill is written, you're supposed to give it back at the end of this year. I'm going to go through a couple of other questions that we have, and then I will proceed into the next section. So I'm just going to look through a couple of questions that we have. Somebody asked, when we did our EIDL loan, they did not require DUNS or SAM. Correct. This is completely new. If you apply for a PPP and you had to do FTE calculations, the way they did those FTE calculations are completely new. Whenever they pass this sort of legislation, they don't do a great job of going back and asking if there's already a system. They just invent a new system. So this is the way that they determine would be the easiest way to determine whether a restaurant is with DUNS or SAM. What entity types in NACIS codes are eligible? It is not yet determined what exactly the NACIS codes are, going to be used. The way that the bill is written currently only lists those few types right here, but they haven't assigned the code numbers to it. So we'll probably see that kind of nailed down in the next couple of weeks. What if your 2020 taxes have not been filed? If there's any CPAs that are in the room that are in tax season right now, I'm sorry. But you're probably going to want to push your CPA to get your tax returns done. And I find it insanely unlikely that this grant is not going to require your 2020 taxes when they're looking at comparing your 2019 and 2020 numbers. So I would recommend that you see about getting to the front of the list if you are on extension and getting that your tax returns done. Just let them know, your CPA know that like you're trying to get this grant, you probably are going to need it, and hopefully they'll help you with that. Address on tax return is a home office location rather than a restaurant physical location. It should not be. They are looking for your physical location, and then in some other places they're looking for your for where you've filed on your articles of organization, what that address is. But they're most concerned with your physical address. And as long as you are uploading supporting documentation to DUNS that verifies that that physical address, that's what matters. So in that case, what I would do for the supporting documentation is I would look at the utility bills as the real option there, because those are going to list the service address, which lists the physical address. When is this program going to start? They are hoping that the program will start in April. When in April, unclear. We are expecting to see guidance in the next week or two, is what they said. So generally speaking, after they release that guidance, it's probably going to be another week or two before they have the system set up. Luckily, you know, thanks to the changes they made with the EIDL application process and these other systems, they've kind of streamlined and broken enough things at this point that they hopefully will be able to set this up faster. But SVO grants just went online maybe a week ago, and they just announced that it'll be live on April 8th. So we're probably expecting somewhere, it'll be a 3 or 4 week timeline. Just going through some other questions here. So would other beverages, soda be allowed? Yeah, I think that probably that's safe to say. I'm really not expecting that they're going to knock out the alcoholic beverages. They're probably going to include that. I was advised by my business not eligible for PPP because we were not open for business until 11/2020. Is that correct? Yes, that is correct. If you had to have payroll, in order to apply for the PPP, you would have had to have payroll as of 2/15/2020. Any date beyond that, you're not eligible for the PPP. However, the upside of that is that you would be able to, that you'll get a larger amount with this grant. So that is the upside to that. Can you say more about the notarized letter? What is the purpose? I was told by the SBA that it was required only if the business was empowering a third party to represent the business to the SBA. Basically, it's just what that is it's just appointing, it's just telling the government who is the point person with this program. So if it's not a third party that's managing it, it's a pretty short notarized letter that's just saying I'm doing it. But that's kind of the purpose of it. And essentially, you can just download the IRC's boilerplate statement, get it notarized at a local bank. And for those of you that have never had something notarized before, a bank is a great option. It's going to be a little tricky thanks to COVID, but that's where I would recommend getting that set up. And and then you just scan and upload that document, and then it should be good to go. Will these expenses paid with these grants be tax deductible as the PPP expenses are? It looks like they are going to be tax deductible. On a federal level, then they have to deal with all the states, but generally a lot of the states follow suit. Right now with the PPP, a lot of people are, a lot of states are still reeling with whether or not it's going to be taxable or not. And that's why a lot of people are on extension right now, because your CPA doesn't want to file a return knowing that it may or may not be taxable, or can't really submit a return. Okay. So I am going to head on to the next part here. And if I see any other questions in the meantime, I'll do my best to answer them if I can. What if we have, what if we have payroll as of 2/15/2020 but are not open yet? Are we still eligible for round 2? I will get back to you on that question. Okay, so recommended resources. You know, I'm not going to have a webinar every week for this. I probably will have another webinar coming up close to the release date to kind of give everybody an update on what that is. And I will invite everybody that's on this list to that webinar update so that you guys can get a status update. But in the meantime, I want to give you guys some resources that you can pay attention to so that you can stay up to date as well. If you have not already, shameless plug, subscribe to our newsletter. Just go onto our website, wait a few seconds, and it'll pop up and ask you if you want to subscribe. We don't do any sort of, we try not to do any sort of shameless ads or anything like that. We try to just get you the content that you need for this. And we try to keep it light and entertaining to read because a lot of this stuff is brutally dry. So we try to put this in plain English and try to explain it in human talk and not in accountant or legislator talk as much as we can. Sometimes we have to, but I highly recommend subscribing to our newsletter, and we'll try to get you as much information as we can. The other one is follow the SBA on Twitter, SBA.gov, and turn on the notifications, the bird logo, so that that gives you push notifications. Now, I hate notifications more than anything in the world. I hate my phone vibrating for some stupid notification. But turn this notification on for now. Once you get all the information you need out of it, shut it off and to unfollow if you want. But they do have a lot of information, and that's usually the first place where they release information, if not on their RSS feed. So that's a great place to get a source right from the horse's mouth. The other two recommendations are the Independent Restaurant Coalition and Massachusetts Restaurants United. They both have newsletters. They're both great. If you are in Massachusetts, I highly recommend MRU. They will tell you everything you need to know on the state level. If you are outside of our state, there are other organizations. I know like Oregon, California, a couple of other places have these independent coalitions in working on the state level. That's one of the initiatives that the IRC put out there, was to build this grassroots movement. But both of these newsletters are just related to the news that is happening in terms of legislation either federally or on the state level, or other things that affect restaurants acutely. It's hugely important to subscribe to them, to support them. If you do get these grants, I'm not affiliated with either of these organizations, but I would recommend supporting them so that they can do more to get more help. And then also check out the resources page on the IRC website. There is already a page dedicated to this grant that walks you through the SAMS application process, the DUNS application process, all the information that you're going to need, all the boilerplate statements, and any sort of updates that they have in terms of what's going on. They're the people that are currently in the room having the conversation, or the Zoom room, having the conversation with the SBA to set the guidance for this program. They have their ear closer than anyone else as to how this program is going to work. Also follow both of these organizations on social media and share everything they have. The reason that this legislation was put in this most recent bill was because of both of these organizations' efforts. And the information that they are sharing, they're doing so that they create more of an impact on a national level about common folk understanding the pains of the restaurant industry. So the more that you can do to share any stories that they have, or put any information that they have out on your own business's website, is critically important to their success. Alrighty, finally, if you have more questions and want to connect with us directly, that is our email address, hello@prefix.accountants. You can also visit us on our website or any of our social media. We are going to do everything that we can to make sure that you all have as much information about this program as possible. As soon as we get definitive information, we're going to be distributing it. And so as well as the IRC and MRU page, you will frequently see a lot of these updates specifically to this program on our social media as well. I wish you all good luck in applying for these DUNS numbers and SAM legislation, and hopefully it will be dead by the end of this week, because it is painful. Everybody realizes it. Thank you so much for attending. I hope to see you all or hear from you all in a few weeks when we have some more updates. Thanks, everybody. Bye-bye.